Makes you wanna go. Makes you wanna go. Na 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 na. Makes you wanna go.
Hey, everybody. How are you today? Listen, we have a spectacular day for you today. My co-host is on vacation, so I'm rolling solo because you know the show goes on. And I want to thank you all for stopping by to watch Gab with Goldn Bronze today. We realize that you could have watched any other TV show, but you chose to watch us today. And so we appreciate that very, very much. I have a young lady with me today. Her name is Wyneisha Webb. And I know Wyneisha from many years ago, probably 15, maybe 10. Wyneisha was born in Inglewood, California, and she grew up predominantly in Houston, Texas. She's the youngest of 4 children and was offered college scholarships for basketball, volleyball, academics, and orchestra, but she chose a basketball scholarship. She graduated from the University of North Texas and studied psychology. She then did 2 years of a master's degree program at SMU studying for her LPC and School of Counseling. The goal was for her to get her PhD in sports psychology to eventually be a therapist for the WNBA. But in 2014, she was recruited into the financial service industry via the life insurance and retirement umbrella. She was working as a claims adjuster and started her business with PHP Agency part-time. In the last decade in her organization, the Pharaoh Nation has helped over 700 families put life insurance benefits into their households and helping recruit individuals all over the U.S. to build a business from scratch and become a broker running their own office. She specializes in all types of life insurance, long-term care, indexed annuities, and debt consolidation. She just crossed her 10 years in business, and she's very excited for what she is building on her own. Thank you, Wyneisha, for coming on. Do you have a few words that you would like to say?
Yes, thank you, Goldn Bronze, and hello to the viewers out there. I appreciate you guys so much for inviting me onto your platform. Hopefully, I'm able to provide some value for you guys as we chat today. So thank you very much for the introduction. And yeah, I'm excited to get started.
Yay. So I have a quick question. I always wondered what PHP stood for. What does that stand for?
PHP stands for People Helping People.
Oh, sorry. You know what? Because we're women helping women. So maybe I'll use that little acronym WHW.
Yeah.
We are women helping women. That's our little mantra. So the Pharaoh Nation, where did that name come from? People might want to know that as well.
So in the office, we go by TPN. The Pharaoh Nation was something that I came up with. When you are brand new in the business, they talk about becoming a broker and having your own logos and team names and colors. So you automatically start imagining, like, what do I want us to stand for? So I grew up Christian. I am Christian. So sometimes I get the question like, pharaohs, why that? But when you think of a pharaoh, you typically think of the things that they embody, like being strong, having strength, being powerful, being feared. We are in a very competitive environment, so I like to instill a lot of confidence into my agents. They are always number one at what they do. They're very wealthy. So it was more of what's a word that can kind of give these characteristics of, as I'm recruiting people into the industry, you meet people where they are and you see them grow into a leader. Or the other thing that is huge for me is I'm in a male dominated industry, or you see a lot of couples. You do not see a lot of single women. But when you speak of a pharaoh, they don't have a differentiation of king or queen. You're just a pharaoh. So that was something for me. That was like my little stamp of like, yes, it's just me and that's fine. So that's where the nation part is kind of like how, they say like it takes a village to raise kids. I want our team to kind of be like, we call each other cousins, where it's like, it doesn't matter if you're a part of our team or not. We're a big family. We want to make sure if we see someone that needs help or needs some guidance, we kind of embody that. So that's where the nation part came of being multi-cultural, diverse, and being a family.
Okay, so before I get into the questioning, so you have your own brokerage now?
Yes. So when you first get started in PHP, you're started off what they call a hybrid entrepreneur. So back when we knew each other, that we saw each other daily, I was working a full-time job during the day. I was in grad school at night, and then I was doing PHP part-time. Once you become a broker, there's a series of numbers that you put up, a combination of new business partners and sales. And when you do those numbers, you become a broker. So under that brokerage, I've helped promote 7 other people that are now within my brokerage. So I have agents literally all over the country. Our biggest areas are in Mississippi, Louisiana, and California. And so it just kind of starts taking a life of its own, but you end up training the people that also become brokers, and they start kind of having their kids, if you will.
Okay, so also we'll get into the questioning in a minute. I have these questions on my mind. So
Sure.
how long does it take for someone to become a broker if they are interested?
The time frame is 90 days that people typically do it. The record in the company, someone became an agent, got licensed, and 57 days later, they were a broker.
Wow, that's
on
amazing.
average, you see anywhere from 6 to 18 months.
Yes.
Because it's like you're not just doing numbers, you're having to develop yourself, you're reading books, you're changing your dress attire. You know, financial services is one of those industries that it's a very first impression does matter. So your first impression and all of those things kind of become something that you work on along the way. And so numbers wise, it's only a 90-day time frame. But typically I've seen people 6 to 18 months.
So is there special licenses that they have to get or testing that they have to do?
You have to get what you call a life license. There are some companies that will require a life and health license. PHP, just the minimum is a life license. It's $33 through the state of Texas. I know states like Illinois or California are, close to $200, $300. So it depends on the state that someone's in. But overall licensing costs in Texas is about $180, split up between a couple of different things. But yes, you need a life license.
All right, we'll finish in just a moment.
Okay.
Thank you for joining us. So, Wyneisha, can you go ahead and finish what you were saying?
Yeah, so you do have to have a license to get into the industry. They'll ask you if you have any issues with felony, misdemeanor, bankruptcy, or tax lien. We do have a lot of individuals in the company that are not from the U.S., or maybe they had a detailed past. So we see people work alongside of spouses, or you'll see like a mother-daughter type of partnership where if maybe I can't get licensed, but my mom can, then we'll build the business together. So total in Texas, you're looking at like $180 and it's split up. But once you get licensed, you never have to take the test again. You just maintain the license every 2 years, which is about $60.
That is cool. I didn't know that, Wyneisha. I thought it was like years of testing. And
oh no, I have not tested since 2015. I'm not testing again.
That's cool. So Wyneisha, explain what this chart is here that we're looking at quickly.
So the chart, that's something where getting into the industry, you meet people that traditionally we hear go to school, get grades, get a job with a 401k and benefits. And this chart, we call it the 4 homes of money because there's 4 places, and I'm going to pull it up on here so I can see it as well. There's 4 places that typically you look to as far as like investments to put your money, right? Typically, you're going to hear about a 401k, the stock market, real estate, banks, places like that. Traditionally, you never hear about life insurance. And so in this chart, For most people, you're looking for places that your money can be liquid. Like, do I have access to it? Is it safe? Am I going to wake up and see that a chunk of my money is gone? Is it growing? Is there a rate of return? And then the last thing is tax advantages, because we all love Uncle Sam so much. So in this chart, it's one of the main things that we talk about. We call it flipping your home upside down, because in traditional world, we go into a job and 95% of Americans have their money set up where the bulk of our portfolios are in stock market accounts like 401ks. Then we hear people talking about buy a home. It's the American dream. So we get into real estate through home ownership. Most people have some type of bank account, or if they're trying to diversify, they'll do multiple bank accounts, but banks return less than 1%. And then if they ever talk to someone, they look at life insurance. So this chart is showing that the only place that you have liquidity, safety, a rate of return where your money is growing, and some tax advantages, having 4 out of 4 of those exist in life insurance and not in the other places. So that's how we're introducing, like, hey, did you know about how this stuff works? Because typically when you think of life insurance, you just think, oh, when I pass away, someone's going to get a check. So PHP is introducing what wealthy people have been doing with their money for a very long time. And you don't have to have $50,000 sitting in a bank account to have access to it the way that you would if you went into like a Charles Schwab or JP Morgan.
You know, you're honestly correct. A lot of people don't even think about life insurance when they start thinking about, making investments and stuff like that. Yeah, so I'm going to take that down and bring us up here together side by side.
Okay.
Now, I do have a question for you. What are the main types of insurance everyone should consider?
Under my umbrella, I'm on the life insurance side. I have car insurance. I have renter's insurance for my place. But I do have 3 different life insurance policies. I think in general, sometimes there can be this like myth of like, do we really need it, or is it important? And no one's ever sent a check back when they got one, whether it was for their car, whether it was for a flood or a natural disaster. I know for like homes and cars, it can be a very different world of how those things work. But for life insurance side, I always tell people, what do you have for life insurance outside of work? Where it's like, no matter what, whether you stay with an employer or not, do you have a policy that you know is yours? You got it at the youngest and healthiest that you were, and it's going to stay with you for the rest of your life. So definitely life insurance. It is ironically the only type of insurance that the government does not mandate. Like, you can't live in a house, you can't drive a car without insurance.
They don't say you have to have life insurance.
And I think secretly the government knows that us like average middle and low income families are catching on to what wealthy people have been doing inside of life insurance. So they're like, we can't mandate this because everybody's going to find out the secrets.
So can you tell us the different kinds of life insurance?
Yeah. So your 2 main types are temporary, which is like term. So think of that like 10 years, 20 years, 30 years. You have it for a period of time. Typically, you can get a lot of coverage for very little cost. So that's where you'll see people that are paying, $15 to $50, but maybe they have anywhere from $100,000 to $1 million of coverage. And term insurance, typically you see it as like a mortgage protection. If someone passes away, it's like pay off my house, leave it to my babies. Maybe you see it for like, I want to send someone to college, or I just have a lot of people that rely on me. So I want a lot of coverage and I can't afford much. So I'm going to get a term policy. So that's the main type is a temporary policy called term. The other type is permanent. That one is like, you'll hear a lot of 50-plus-year-olds, they talk about whole life insurance. Whole life policies are not bad. They are just older. Today, there's universal life and index universal life, which is basically like a more advanced version of whole life, right? So permanent, just think you have it for your entire life. You either can have coverage to age 100 or 120. There's typically more bells and whistles inside of permanent policies, like living benefits, long-term care. You also will see people having cash value growing inside of those permanent policies. So your 2 main types are term and perm, but within inside of permanent, there's multiple types of permanent policies.
I don't think people realize, all my life growing up, I was told get term. Then as I got older, I realized it was going to term out at a certain age.
Yep.
And I had paid all this money, and now I don't have anything to show for it because
Yep.
it doesn't grow any money or anything like that. So then as I got older, like you said, then I thought I was told you need whole life. Now you tell me, do I have the right coverage?
Yeah.
You're right.
Yes. So
You're fine.
yeah, I don't know if you remember, you were like gung ho on I need a whole life policy, and I'm like, so nowadays, this was almost what 6-7 years ago, I think it was, but
Yeah.
the whole companies
It's
that sell
longer than that, I think, but okay.
has it
It
been
might
longer
have
than
been.
that? I think it was like
I don't know.
somewhere
Well,
between.
it doesn't matter right now. Yeah.
You got it. So whole life companies, the biggest difference is whole life policies used to only go to age 100, and they did not have living benefits inside of them.
Right.
So just like there was, the first like Nokia phone that people played Snake on it, but now there's like Galaxies and iPhones 16s. Just like the industries have advanced, so is the life insurance industry. So now you have universal or index
Let's
universal
get
life.
back to that in just one
In just a
moment.
second, okay.
Alrighty. We'll be right back. We have to pay the bills. Okay, everybody, we're back. So as you were saying, Wyneisha?
So whole life policies are your most traditional. Anybody like 50 plus, they typically remember, especially if you grew up around a grandparent, you remember the insurance guy coming and collecting
Coming to the house.
and making sure our grandparents paid their policies, like most definitely. So universal life, or you might hear the term IUL, which stands for Index Universal Life. They're just a more advanced version of whole life policies. As the industry gets better, they're making the policies have more bells and whistles. So whole life, typically, not all insurance companies, but your traditional whole life companies are going to go to age 100 and they don't have living benefits. So ULs or IULs now have where if I have a unexpected heart attack, stroke, cancer, I get up and I can't go to the restroom, I can't control my bladder anymore, things that they call activities of daily living. Those are things that now you can pull money from your insurance policies to help take care of your essentials, because our health insurance is going to take care of our doctor's visit, prescription bills, chemotherapy, treatment, but our health insurance accounts don't still pay the mortgage. They don't keep the lights on. So your life insurance plans are allowing you to pull money tax-free if one of those life events happen. And I treat it like a light switch. Hopefully you never need it, but
Exactly.
it's already built inside of it, which I just had a friend. She's 1 year younger than me. She's 34 and got diagnosed with a rare autoimmune disorder. Has been in the hospital for a month. Couldn't use her hands. Still has not been able to walk. She's finally able to start gripping her hands. I was at the hospital washing her hair last week because it's like the little things that we take for granted.
I know, right?
And it was stripped just like that. So I'm literally in the process of filing a living benefits claim for her, that her life insurance policy will send her up to $3,000 a month tax-free because she has a universal life policy with living benefits.
Well,
So
thank goodness for friends like you. I'm sure you watched out for her.
I was like, Lord, please tell me she's still paying on this policy. Because, sometimes people have it for a little bit and then they stop paying it. She got it in 2017. So when I called, they were like, yes, it's still active. I was like, thank God.
I know.
Just
So,
never.
Wyneisha, this is a question that people may want to know. If they tap into those benefits, does it take away from the
death benefit?
Yes.
Yes, it does. So you can do what you call a partial, where maybe the need that you have for your health doesn't require you to cash out the whole policy, and you leave some of it for the death benefit. But typically, if you see something like cancer, for example, they
Yes.
usually are like, I need the full lump sum. I don't know how this is going to go. I'm going to do my job. I'm going to be, optimistic. I'm going to pray. I'm going to go to my treatments. But at the end of the day, if something happens, we can use from this lump sum to bury me. So it just depends on what the illness is. If we have the option of doing a partial, then I always prefer it for people, because I'm like,
At
depending
least
on
leave
what the illness
something
is,
for if they need it for which they
for the
purchased
burial
it
later.
for. Yes. Okay. How does the life insurance work when how does life insurance work, and when should someone think about getting it?
So I mean, as early as 14 days, you can apply for life insurance. One of the things that we have talked about a lot in our office is creating the future millionaires.
Yes.
By us as the adults. Like my nephew has a policy. He got it as early as, I think he was 4 months when my twin brother applied for that policy. So we're seeing people now that we're becoming more educated, getting policies as young as possible. The younger you are, the healthier you are, and the best rate that you will get. So just like you mentioned earlier, you kept hearing get term, get term, get term. And then when you get older, it's like, oh, I need something that's not going to keep having to be renewed. So it doesn't make it unaffordable, but if you're unlucky with health, then sometimes people, their health has changed. They can't get approved. So
No, I've been paying for my grandchildren since they were born.
see,
For their insurance, yeah. See, I know
in the future, in the future, they're gonna be like, I have this money, I started a business, or I bought my first 2 properties because my grandma got me a policy. So
I did the same with my daughters, and my one of them let it go. The one in Dallas, the other one still has it, and she has cash value.
Yeah.
She paid on that policy. So,
Yeah.
and she's had it for ever since she
Yeah.
was born. I bought it. So yeah, I did that for my children and my grandchildren. When my children turned, I think 25, I asked them to take it over.
Take it over.
But I'm still paying for my grandchildren, and I'll probably do the same for them. When they
Kudos.
turn like
Kudos to
25,
you.
tell them, okay, now y'all need to pay this. You should graduate from college.
Spend your money.
Yourself.
Kudos to you for doing that, because I mean, I think it's our responsibility to try to give the next generations what we didn't have. We can't fault our moms or our family for doing the best that they could with the access and the information they had. There's a great movie called The Burial, if you've seen it.
I've seen that, yes.
So that movie for me was like, wow, this is why, because I'll just speak frankly, clearly I'm Black, and I would go into homes or talk with people where it's like Black people buy life insurance more than any other demographic. But there was always this, like, you felt like you were kind of fighting about it, or it's like, well, what about whole life? Or like, I'm only going to get 20,000. Like, it was a very like, I'm doing this and only this. And so, so when I saw the movie The Burial, I was like, oh, wow, we have a long history of being taken advantage of and misused, or especially being women, typically the spouse is the one that is taking care of things, even though the woman is usually the brains that's handling everything. But seeing that movie, it opened my eyes a lot of like, okay, I need to approach this with even more grace of like, maybe I am dealing with a 50 or 60-year-old that they have been burned before. So just taking the time to really educate the community, not just Black people, but specifically, I spend a lot more time there because I'm just like, we're buying it. We just need to make sure we're buying the right kind that's going to be the best for our families.
And then that's it. A lot of us don't know what to buy. That's why you're here. Yeah. Okay, so what factors affect the cost of insurance? So,
okay, number one factor, age. Men are more expensive than women. So shout out to us. Men just don't go to the doctor. They don't take care of themselves.
Yeah,
so
they hide their symptoms and they get in denial. And
so
they go away when the wind blows to the east.
So the insurance companies are like, we're not even finna play with y'all. We just gonna make y'all premiums higher. If you smoke, it is a lot more expensive. I just had a guy that he applied for a policy for $28. He did not tell me the truth about it, that he smoked, but they saw it in his records. It's now $54. So smoking definitely changes it. and that's tobacco. If you're in a state that you smoke marijuana, it's okay. Insurance companies are cool with that.
Really?
Yeah. See, everything's getting advanced. Things like your health. So today, things that are kind of considered normal. Oh,
Okay, hold your
come
thought.
back.
We got to pay those bills again, but we'll be right back.
You can't tear me down. You can't tear me down.
All right, thank you for returning. And as you were saying, Wyneisha,
So factors for getting approved. If you are older, if you smoke like tobacco, if you have pre-existing conditions, that's probably one of the biggest myths is like, I already have a diagnosis, I can't get anything. That is not true. So PHP being a brokerage, we have over 30 companies that depending on what that person has, I'm able to go do my research and underwriting to see, can I get them something? So things like diabetes that is not insulin, high blood pressure, cholesterol, asthma, sleep apnea. Those are your like most common things that are coming up. If it's something like congestive heart failure or epilepsy and you're having continuous seizures, those are the types of things that are considered
high
uninsurable.
risk.
Those are the types of things they won't even
Really?
consider it. Yeah.
Wow.
So I just always tell people get with someone and be honest with them. I always let people know I'm not the feds. There's nothing you can tell me that's going to get you in trouble, but I need to know so that I can see if I have a company that can get you approved. And then I'm like, once you get approved, do not miss a payment. Do not let it cancel. Like,
Yes, that's
go to war to
important.
get you this policy.
I didn't know that epilepsy and did you say high cholesterol or no?
No,
That
congestive heart failure.
just okay.
Yeah.
Yeah, but,
Epilepsy can get
I can
approved.
see that.
Yeah. Epilepsy can get approved if they have not had a seizure in 2 years.
Okay.
So that's what I mean by like everything is like contingent upon, let me look it up.
Yeah, just be honest, people.
Yeah.
So tell us how disability insurance works and who needs that.
So disability insurance is probably like the most common thing that is making people revisit adding more coverage. Like, so I myself just applied for my third policy because I went and saw my friend and I was just like, wow, like who knew? You just one day your leg is hurting, the next day you're in the hospital for a month. So disability insurance under our umbrella of the life side covers things like terminal illness. So anything that a doctor says you have less than 2 years to live, critical illness or injury. That's like maybe you got into a bad car accident, you didn't pass away, but you're disabled for the rest of your life. That's like probably your best connector there. And then chronic illness is I'm just getting older. I can't feed myself. I can't bathe myself. Can't get up, go to the restroom. Can't control my bladder. Those are things that will fall under disability insurance. And that's where we were talking about earlier. You can pull money from your policy to help pay your bills while you're getting back healthy. The number one thing that makes people file bankruptcy in retirement is medical cost. So for people that if you already have a life insurance policy, I'm always like, do you have the new one that has disability and long-term care built inside of it? Because people aren't just having a heart attack and passing away anymore. You see people that they survive 2 heart attacks. They survive cancer twice. The major illnesses, modern medicine is keeping us alive.
Yes.
So I feel like everybody, if you're at a place that you can be considered for it, look at a policy that has living benefits built inside of it. Hopefully you never need it, but if you do, it's already there.
It's there.
Because
Yes.
once you need it, it's too late. You can't get it.
Right.
So
Right. That's good information. What are some of the common myths that people should be aware of?
myths would be life insurance is too expensive. Sometimes if someone has like a pre-existing condition, they feel like I'm not even gonna go talk to anyone because I know I can't get approved. Sometimes you hear interesting things like, if I pay into it all this time, it's not gonna pay to my family. And I'm just like, that almost feels like a conspiracy theory. Like, why would it not pay to your family? So sometimes
Right.
you see people just, you hear stuff like even something small like what you said, get term, get term, get term. It doesn't necessarily fall under a myth, but it's like, are you doing your own research? Are you talking to someone that is knowledgeable, that actually works in the field? Because oftentimes I love my family members, but if they've never run a business before, I'm not taking advice on being an entrepreneur.
That's what I say. Oftentimes we're just listening to our family. They don't know any more than we know.
I'm like, what? Oh, my auntie said, I'm like, your aunt's a nurse. Like, why are you listening to her about life? She's not a life insurance agent. Oh, my dad always told me to do this with my money. I'm like, is your dad a stockbroker? Is he working finance? Like, well, no, this is what he always did. I'm like, I don't know. I'm kind of blunt about that. I'm like, if you don't want somebody's life, don't take their advice. Like, you need to go seek out people that are doing whatever you want to get to, and really like kind of vet the people that you're taking.
I agree with you 100%. I got the worst advice from people that didn't know anything more than I knew about the situation.
Yeah.
You know what I'm saying? So.
And they will say it confidently. So it'll make you question like, well, maybe I should. And it's like, no.
And that's about anything in life, really. You know what I mean? So
yeah. And especially us as women, like people see us almost in this like damsel in distress type of light. But honestly, I'm like, we run the world. There's nothing that I've seen that is successful that does not have a woman's hand on it.
Yes.
So like seeing more women step into that power, but not misusing power, because you get money and power and they misuse it.
Right.
We typically are finding ways to multiply it and stretch it. So, that's been really exciting just seeing in general where, you're starting to see more CEOs and business owners and organizations that are completely ran by women. I'm not trying to kick out the men, but it's just like,
but it's a fact, right? Yeah. Exactly. So, if someone is interested in insurance, and we'll move over to some investments in a little bit, but tell how someone can determine the right amount of insurance coverage that is good for them and their families.
We have something that's called the dime method. So it's how much debt you're in. If you have a child or someone that is relying on you, then I think of the death benefit as how many years of myself do I need to replace? So I'll multiply your income by 5 years, 10 years, 20 years. If you have a mortgage and you care about paying off the mortgage, then include that in your death benefit. And then for some people, it's either student loans paying it off or leaving money to send a child to college. So your dime is debt, income, mortgage, and education. Those are the 4 things that would determine how much coverage should I look into getting. And that just is considered like your need for insurance. It doesn't mean that you have to apply at that amount, because obviously it has to be something that you can afford. But that's where term insurance does come in, because you can take care of a big chunk of that need with a term policy and then partner it up with a permanent policy.
So, Wyneisha, can someone quickly use a life insurance policy to pay student loans?
If they have cash value that they've built inside of it, yes. But if not, then typically that is like, because the person passed away, it's, this is actually something that I'm not sure. Like they'll say, if you owe student loans, but you pass away, it could get passed on to your next of kin or spouse or something like that. So if that is true, then maybe they use the policy for that.
Okay, well, we'll be right back.
Okay.
now, on to our program.
Okay, we are back. Okay, what were you saying before I had to interrupt you?
So if you see someone that is, they call it overfunding their permanent policies, where maybe your cost of insurance is like $200, but you're paying $1,000. Paying that extra money helps the account value grow. So on average, these permanent policies that have cash value are growing at 6 to 8% every year, which is why you're seeing people put more money inside of life insurance instead of a bank account. People that are saving regularly, it's like, yes, you need a liquid savings, but if banks aren't returning more than 1%, then that's not your place for like investing. So if someone is heavily overfunding their policy, then maybe you'll see them pull from the cash value after 7 or 10 years to do like a lump sum payout on a student loan. But otherwise, people are traditionally just including it in their death benefit for like, hey, if I have a freak accident or I pass away, here's an extra 70,000, 100,000, 50,000, take care of the student loans. So
Okay, that's
people are
good
using
information as well. Regardless if they die, they still got to pay those student loans, huh?
right. Sam is like RIP, but who's getting the bill?
Oh my goodness. Okay, so we're going to move on to investments here. What are the most common types of investment vehicles? Like, stocks, bonds, mutual funds, what? Educate us.
You're like most traditional that you'll see is ones that you get through work. So traditionally, you'll see a 401k. If you're like a teacher or nurses, anybody that works in like a nonprofit type of field, you'll see 403bs. There's 457s. I call those the alphabet soup. So it traditionally is like a retirement fund that has stock market investments, and your company is working with, say, like a Fidelity or an Avoya. They are traditionally matching your account. So usually you're going to pay money from your check into that account, and they should be matching it. I always tell people, if your company is not matching you, I would not invest in their retirement plan.
Right.
Reallocate that money into either an IUL or like an indexed annuity where it's yours and it's getting some growth, because the stock market takes a hit every 7 to 10 years. Right now, we are in year 15 since the last crash.
Oh,
so
Lord.
we don't know when the next one is coming, but I'm going to call her Big Bertha.
Yeah.
It's going to be a big one. So you're going to see your more traditional of like a retirement account through work. Outside of work, you may see people with an IRA or a Roth IRA, which is an individual retirement account. So just think of like, if my 401k is being handled by my job, my IRA is personal through like a bank or like a stock investor or something like that. Then you might see people that have like an advisor that they do like money market accounts or some type of stock brokerage where they're doing investments into mutual funds and stocks and bonds. But your most traditional is, I have a 401k at work or I have an IRA. So we do not work in any of those lanes at BHP, because those are all attached to the stock market. So our main thing is we want to introduce people to having guarantees where they're not losing money when the market is being volatile, which right now is probably the most controversial time, where this election is going to go down in history. Inflation is
one way or the other, girl.
Inflation
One
is
way or the
high.
other.
Everything's high. And then this is literally the most controversial election that we probably will ever see. So those are all what they call a perfect storm for the next stock market crash. So I've been talking to people, if you have an old 401k or if you have an IRA or a Roth IRA, money just sitting that's from like a settlement or just a lump sum, consider looking at insurance contracts, whether it's something that you're paying monthly or something that you can put a lump sum into, which is what they call an indexed annuity, because it's going to provide you a death benefit. It's going to grow your money. So the account is still doing that 4 to 6% on the low, 6 to 8% on like an average, and then up to 12% as like a max. So you're not getting as high of returns as the stock market, but you're not having to check your account in the next 3 to 6 months, potentially. I don't know when the crash is coming, but you're not checking your account and seeing that like $40,000 is gone, $20,000, even $5,000.
Lord, I need to move mine.
Yeah, they don't send us a warning. There's no bird that comes and it's like, hey, it's coming. You just wake up and the money's gone.
So let me ask you, can you speak on the difference in um, the 401k
Mhm.
and pension, because believe it or not, people think it's the same thing.
So most companies don't offer pensions anymore unless you worked for the government. A pension is a retirement account that is designed to send you a check for the rest of your life. Typically, if it's through an employer, then when you pass away, that money is left to a surviving spouse. Some companies have stipulations of like, this person must be 15 years of your age, or they always have little asterisk marks because the reality is the government wants to keep the money. Like, we're in trouble as a country. Our economy is not doing good. So pensions are designed to grow while they have the account, and they're supposed to be protected completely from loss. A 401k is not a pension. A
Right.
401k is a stock market account. It is made up of what they call indices. So that could be like your S&P 500, Dow Jones, NASDAQ, Facebook, Apple, Google, all of those things. And the money is designed to grow. So you could make like 20% in your 401k one year. But if another 9/11 happens, people lost 40% of their accounts within 3 months. When the 08-09 real estate market crashed, people lost another 40%.
I got hit both times, Wyneisha.
Both of those. So our baby boomers and seniors, we're seeing them now looking at retirement, and it's normal to walk into a department store and see someone who's, you used to see the door greeter like 55 because they're just bored. Now it's like they're 80 and
Yes,
they have to be there.
that's
And
true.
that's because that group that lost money twice, they call it the silent generation,
Yes,
where you got hit with a 40% loss twice, and everybody's told, don't worry, it's gonna come back. It's just, it didn't come back fast enough. Now people are 60 plus years old and they're like, I'm gonna have to work until I die. I literally can't retire. Everything's expensive. So security is not what I thought it was gonna be. I was playing Russian roulette with my money in the stock market in my 401k. And now it's like, hi, can I check your receipt?
or
And
they
no-
didn't know because they were told just to leave it alone. Just leave it alone. Don't move it. Leave it right there. I don't know
Yeah.
how many times I heard that.
Yeah, because
Okay.
there's someone that gets paid for you to leave it there.
Yeah, of course. I know
So
that
for
now.
us,
When I was 30, I didn't know that.
yeah,
Yes.
when you're 30, it's like, oh, I have time to recover, which you do, but you're still recovering from a loss. You're not.
Right.
So in an index annuity, when the stock market is growing, your money's going to grow 2/3 of what that market gain is doing. So you're making money just like if you had a 401k, a pension, or an IRA.
Yes.
But on the insurance side, when the stock market takes that hit, like when 9/11 or 08-09 happened, now you're at no risk of loss. So you're not going to make any money, but you're not going to lose any money. They call it a floor.
Yes.
So inside of that index annuity, leaving it there is like, okay, I'm leaving it there from where my money was, not from a 40% hit.
Right.
Because yes, it recovered, but it recovered and got me back to where I was before I lost.
Right.
It didn't get
Exactly.
me ahead.
Exactly.
Yeah.
So why should someone consider insurance policies as investments?
The main three things that if someone's like yes to these, then they should get it is, number one, they want principal protection. Especially the older that we get and we're living longer, it's like, if that's my nest egg money, I'm gonna need it at some point. So to be able to protect whatever your balance is, if it's 30,000, or I just talked to a lady, she has 300,000 in an account, and I'm just like, that's $300,000. You don't want that to get hit with 30% loss, 20% loss. So the first thing is protect your principal. The second is you want income for the rest of your life. So an index annuity is a pension, right? So a 401k is a retirement account through our jobs. An IRA is a retirement account outside of our job, right? A pension is a retirement account through our job. An indexed annuity is a pension outside of our job. So the biggest difference is the pensions do not provide that same death benefit. It lets you choose and designate a beneficiary, but that money is still subject to probate. So that means the government could freeze your account for up to 45 days to make sure you don't owe any taxes, any lawsuits, any child support, anything. Or the stipulation of who can be considered a beneficiary, those rules apply as a pension. In an index annuity, they do not. So whoever you choose as your beneficiary, just inside of life insurance, then as soon as your person passes away, that money goes to that person as a death benefit. But while you're alive, you get a check for the rest of your life. and your money's growing, it's safe, it's protected, and you're not standing at Walmart. Nobody can convince me that these 80-year-olds thought when they were 30 and 40 that that's what they would be doing.
Yes. And I went into a popular restaurant with my mother, who's 90, and saw women that looked her age waiting tables. And it
Waiting
just kind of
tables.
broke my heart. I just, it just
Cleaning
really,
the tables up. And you know they're not talking to these people with any respect. Like they're talking to
right.
them probably like the 20-year-old servers.
Yes.
And it's
Yes.
just like that's literally someone's grandma, mom, elder.
Yes.
And yeah, it's very sad, very, very sad that that's what the economy has gotten people to. And just I'm devil's advocate on it. I'll say we don't know. And then I'll also say people get told and they don't listen.
Right. And that's
Sometimes we
true.
get the information and it's just like, I'll get back to it. I
Right.
don't know about that. And it's like, sometimes we got to be a little bit more open-minded because life is happening all around us. And it's like, there are people that are being sent to you to give you the information. And did you take advantage of it when you heard it? Or was it just like, oh, cool, thanks for telling me.
Right. Wyneisha, I want to thank you so much for joining me today. This
Thank
has
you
been
for
very
having me.
informative, even for myself. And I hope that everybody out there watching us today, somebody got something out of it. I'm sure that they did. I really do appreciate your taking a few minutes out of your time to come sit here and have this conversation with me today. I want to let everybody know the Gab with Goldn Bronze sponsors Golden Swan Cadre, and we would like to solicit your donations. Please take a look at our Facebook page, Golden Swan Cadre, or our Instagram page at the official _ Golden Swan Cadre. Our website is www.goldenswancadre.com. And please dig deep into your heart and donate anything to us. We'll take $1 because $1 adds up to 100, and 100 adds up to more. So we're not particular. Anything that you feel like you would like to donate to us, we would like to receive it. And we surely thank you all for stopping in today to see Gab with Goldn Bronze. Thank you, Wyneisha, again.
Thank you
All
so
right.
much for having
Come
me.
back anytime.
I will.
All right.